Did you know that Kathy Woods of ARK Invest thinks Tesla stock will reach $10,000 soon? Kathy Wood, therefore, is famously known for being a Tesla bull. Because of this, many are doubtful whether Wood's predictions are actually attainable, but ARK Investment's data is worth considering, so you definitely would not want to miss this one. In a statement in late September, ARK Investment CEO Kathy Wood said she's standing by her bullish bets on Tesla. "We stand by all of them," Wood said when asked about her opinion on Tesla, Roku, and Bitcoin in mid-October. ARK Invest's CFA Tasha Keeney joined CNN's Squawk Box to react to Tesla's latest quarterly earnings report when asked about the reason for ARK's positive stance on Tesla. Keeney said electric vehicles are just single-digit percentage points of overall auto sales, so we have to remember that it's still an early market, but we definitely see Tesla as one of the market leaders both in electric vehicles and in autonomy, according to ARK CFA. This is because Tesla uses their customers' cars to capture data to train their neural networks. According to Tesla, the neural networks are bird's-eye view networks that take video from all cameras to output the road layout, static infrastructure, and 3D objects directly in the top-down view. The Z networks learn from the most complicated and diverse scenarios in the world, iteratively sourced from our fleet of millions of vehicles in real time. Keeney emphasized that on the recent earnings call, Tesla CEO Elon Musk reiterated that they are going to do a wide release of the full self-driving beta software to North American customers that signals confidence in that platform, which, by the way, we think is a multi-trillion-dollar market in the next 10 years. CNBC Squawk Box host Joe Kernan also asked Keeney about the Tesla robo-taxi. Keeney shared that they've committed in previous calls to mass manufacturing of a robo-taxi-specific vehicle, so I do think it could be that car, and again, I think that manufacturing commitment is pretty meaningful because you can promise full autonomy via software all you want. When asked about her thoughts on the recession fears and whether or not Musk seems to have any demand fears or supply concerns, Keeney said that, as I read other articles and other analysts' opinions, I think there are demand fears out there. I think that they're unfounded. ARK Invest CFA looks at EVs as a percentage of overall auto sales. According to Keeney, they were something like 7% of total vehicle sales last year. That said, ARK saw gas-powered car sales declined in the past couple of years and are seeing EV sales up on a year-over-year basis. We saw Tesla's revenue alone grow 50% this quarter, so I would look at that, and for macroeconomic concerns, I would be much more concerned about the companies that have the majority of their revenues dedicated to gas-powered car sales because that's what we think is going to decline in the future as EVs become more cost-competitive, says Keeney. In a recent interview, Yahoo Finance anchor Julie Hyman asked Kathy Wood whether the economic shock that the ARK Invest leader talked about caused a subsequent shock to Wood's long-term holdings in Tesla in terms of the stock price and company financials. Wood said certainly all stocks are experiencing difficulty in this environment as the market tries to understand how far the Fed is going to go and how deep this recession is going to be, so Tesla, as I mentioned, is a solution to the problem. According to Wood, it is very interesting to see that gasoline demand in the U.S. this summer dropped to levels that have not been seen since 1997. That's real demand destruction, and it couldn't have happened. We do not believe that without electric vehicles at the margin, traditional automobiles would take a huge share of the market. Wood believes that concern should be directed at the traditional auto industry instead of the fast-emerging EV industry. We think gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and the traditional auto industry has to figure out a way to migrate into electric vehicles. According to Wood, there are a lot of innovations in the auto industry that put the traditional auto industry and consequently traditional automakers in harm's way. Wood pointed to Tesla's autonomous taxi platform as an example of such innovative change. Later, in the interview, Yahoo Finance host Julie Hyman told Wood that her 3 to 5-year-old horizon means not only kind of a midterm or recession-proofing her company's portfolio, but also kind of a midterm-proofing your general election portfolio. Hyman told Wood. Hyman then proceeded to ask the ARK Investment leader how she goes about identifying disruptive innovation that doesn't get disrupted by public policy or political agenda. Wood answered that we have a 6-metric scoring system very much focused on innovation. Wood explained that one of the scores in ARK's 6-metric scoring system is thesis risk, which apparently has a lot to do with government policy. In the early days of ARK in 2014 and 15, we were thinking, okay, the government may be very concerned about the safety of autonomous vehicles, but as we've moved through these last 8 years, what we've seen, thankfully, is that the government and regulators in particular are very focused on the data. The data shows that 85% to 90% of vehicular fatalities are caused by human error. Wood concluded that once human beings are taken out of the equation, 35 to 40,000 lives will be saved in the United States alone. According to Wood, there are around 1.25 million car fatalities across the globe, which is why Wood is gratified to see that the regulators are looking at Tesla vehicle fatalities and say that, for the most part, most of those fatalities were caused by human error. Wood shared that the regulators informed them that people driving Tesla vehicles are much safer thanks to the various automated driving capabilities, and that Tesla is up to 40% safer than most other cars. We're very focused on what governments are studying in terms of the data, and if they stick to the data, innovation typically solves problems and makes the world a better place, says Wood. It is no secret that ARK Investment founder and CEO Cathie Wood is big on innovation. In fact, ARK Investment focuses solely on disruptive innovation, which explains why they are bullish on Tesla. In fact, terms such as disruptive innovation and convergence always seem to pop up when discussing the investing rationale behind Cathie Wood's hugely successful ARK Invests. An asset management fund, ARK Investment has a lot of faith in Elon Musk's Tesla venture, so much so that the stock represents a whole 10% of the fund's capitalization. Tesla checks a lot of boxes when it comes to Cathie Wood's investment philosophy, which explains her bullishness on the EV company. As a matter of fact, Wood's flagship fund ARK Innovation ETF bought 66,190 Tesla shares, marking the firm's second purchase in October. ARK bought a tranche after Tesla reported a miss in deliveries in early October. When Tesla announced its delivery and production numbers through a press release in the latter part of October, Wood bought over 132,000 after the stock fell following Tesla's Q3 report today. Tesla is the largest holding in her flagship ARK Innovation ETF, which is down more than 55% for the year as of November 2022. Tesla has a market cap of $645.43 billion, which makes it the world's sixth most valuable company by market cap, with Apple in the lead. Market capitalization, simply referred to as market cap, is the total market